What are your job responsibilities at the bank, and how did you get into this area and so on?
Well, we'll start with how I got into the area. Actually, I studied economics at UCT.
My alma mater. Excellent.
Oh, nice to know that. I studied business science with major in economics. So I was always going to head into the economic field. In fact, I spent a year at the Bureau of Economic Research early on in my career. And when opportunity came up to join a bank like Standard Bank, which has a global reach, I knew that the opportunity to grow as an economist would be so much greater there. So of course I jumped at it. So as far as what my responsibilities are, my title says Macroeconomic Strategist, which is a fancy way of saying economist. So I spend most of my time looking at real macro indicators, but also a lot of time focusing on currency research. So that would be, of course, the daily slot that we have on CNBC, presentations to clients, doing the bulk of the publications that we publish on macroeconomic data.
Okay, and the audience for that work is both external, the bank environment, but as well as internal, I imagine.
Oh yes, absolutely. We, of course, service several desks within the bank. They're as important to us as our external clients are.
And my understanding also is that, with equity markets, you have to look at the global context. It's not just South Africa or Africa. So you spend most of your time kind of looking at the global macro setting and working out what that means for us here.
Oh, absolutely. We're very fortunate at Standard Bank that we have quite a large research team. So they are people who look specifically at international indicators, and they can give us excellent insight into how they see the global trends panning out, and then we translate them into what the implications are for South Africa.
Perfect. Okay, so let's talk about some content issues now. I mean, the reason we wanted you on was to talk about the global turmoil inter alia with regard to currencies. What's your sense of this move from last week where the Swiss decided that they were going to peg their currency to the euro and not even sterilize the flows, just like say, right, we're up for it and we've got as much money as it's going to take?
That was a very bold move by Swiss authorities, but I think they found themselves in a very difficult position. They've tried to stem the appreciation of their currency, and they've tried various measures, and none of those were really working. So I think they had to make quite a bold step, and they did what they think was the best move, and they've decided to peg their currency to the euro. As for how sustainable that's going to be, we'll have to wait and see. But if you consider the fact that there about $4 trillion gets traded on global currency markets on a daily basis, it's a very bold bank that's going to try and go up against that. And to manage a currency in today's kind of globalized economy is a very, very tough task. So they've certainly set themselves quite a challenge.
Because, as you say, I don't know when it was that George Soros broke the Bank of England, but that was the last time I can remember people really, making bold claims about pegging a currency. Although the Chinese have their pegged currencies, so I guess it is an issue about how you're going to manage your own flows. But, as you say, $4 trillion worth of daily flows in global currency markets seems quite a bold move.
Yeah, that is huge. I mean, the Chinese are the one standout example, but I think they're also in a fairly unique position. Their dramatic trade surpluses allow them to accumulate reserves, and I think they're currently the world's largest holders of dollars.
So just unpack the difference there. So the Chinese are basically using trade surpluses to buy US treasuries, whereas what the Swiss are doing is they're saying they're just going to print Swiss francs to buy euros in this case.
Well, it certainly does seem to be the case. I mean, I don't know that they would print money ad nauseum, but certainly they don't have the kind of trade surpluses that would compare to a China, for instance. So they're at a disadvantage from that point of view.
Just for the record, where do you stand on these issues around global reserve currencies? A lot of people like to bash America, so they say, oh, well, the dollar's finished and now we can have something else. But in the way that you see the currency markets out there, do you think there's an alternative to the dollar, or is it going to be a multi-currency world going forward?
That's a very, very interesting question. I think quite tough to answer at the moment. Certainly the dollar has its problems, and that's why these calls are coming up now. But when you look around, there are very few other currencies that are even contenders to be a global currency. A lot of people look at China, but there's so many things that would need to be in place. For instance, the depth of your financial markets plays a big part, and China isn't quite there yet. So certainly over time, things could change, but we'd be looking at least a 20, 30-year period. So in the short term, I don't see any currency that would be able to replace the dollar.
Although, interestingly, I saw last week a news story saying that the Nigerians were going to put a portion of their foreign reserves in yuan. I don't know whether it was significant relative to their dollar holdings or even what their dollar holdings are, but you're starting to see these things increasingly. Sometimes it seems almost people are making a tactical comment rather than a a deeply significant one by just saying, look, we're going to hold some other reserves.
Yeah, it does seem to be largely tactical because central banks, as a rule, tend to be quite coy about what their holdings are and what the various percentages are. So when people say we're shifting out of dollars or moving into euros, it's very difficult to know to what extent those shifts are being made.
Yeah, and whether it's like a big portion or whether it's just, trying to make a statement.
Absolutely.
Okay, in terms of currencies in Africa and so on, we know that your employer, Standard Bank, is moving into all these different African countries. There does seem to be a renewed focus on making that the core of one's business plan here rather than trying to do all sorts of dramatic things in the US, Australia, and the developed world.
Yeah.
Is that, in your appreciation of the situation, a sustainable and enduring trend? And what's your view of the financial services sector in Africa as a business opportunity?
Well, certainly there are great opportunities in Africa, and that's part of the reason why Standard Bank has been quite aggressive in pursuing that avenue. Of course, if you look at how the global economy has played out post-recession, does look like for the short to medium-term growth in developed countries is going to be fairly muted. And of course, financial services sectors in those countries tend to be quite advanced already, very limited opportunity for growth. So certainly Africa does present an exciting opportunity and for a number of banks. So that's where growth is going to come from in the next few decades, mostly emerging markets, but I think Africa presents an especially appealing reach, particularly because we are part of Africa. Many countries use South Africa as the gateway into Africa, so it makes sense to expand one's reach into Africa.
Quite hard work, though. I mean, capitalizing a bank branch in each country, the cost of capital being quite high, or at least then the return on equity being relatively depressed because you've got to really kind of go into a new environment, set up everything, capitalize it, and so on and so forth. But better than just having a rep office in these countries.
Well, absolutely. I think one has to take a long-term view. Whatever market you enter into, you're going to have to go through those steps of establishing yourself, setting up branches, perhaps rebranding even if you buy another company. So it's always going to be a very high initial cost, but over the long term, one obviously takes a view that you would expect to make that money back and then some.
Okay, final question. A few years ago, people used to talk about currency integration being a good thing. Now, with the problems in the eurozone, I'm not sure if they do anymore. What about the idea that we were going to move towards a single African currency? People used to call it the Afro, which was perfect. Or was this just Muammar Gaddafi's idea? Now he's gone, it's off the agenda.
Well, I don't know. Certainly one doesn't hear much about it in the news any longer. All seems to have gone quiet on that front. And I think when you look at what's happened in the eurozone, really provides a very interesting example of how currency unions work, what the potential pitfalls are. They started off in a much stronger position than any other region. They were already quite integrated, had great trade links with each other. Generally, their economies looked like they could be harmonized, had low inflation rates, were very similar in many ways. And so it made sense for them to try and form this common money area. But now problems are emerging that one really couldn't have predicted at the beginning. And I think that's given policymakers across the globe some pause for thought.
Because the assumption always used to be that these integration projects were good for the little guys and that the good economies or the strong economies would like pull everybody along. But now it seems as though the view has shifted a little bit. And critical issues, as you say, around design of your fiscal policy and how that relates with monetary policy and your bank reserving and your insurance companies. So quite an interesting real-world experiment.
Yeah, I think it just goes to show that when you are part of a union, every member is important, because what happens in one country can have knock-on effects and can potentially destabilize the entire region. If you look at what happened in Europe, it started in Greece, and as slowly the contagion has spread and it's become a Euro-wide problem. So really it gives some very great food for thought, I think, for anyone who's considering, any policymakers potentially considering going in that direction.